Hi, everyone. My name is Kimberly Essie, and I am an MSW intern at Upward Bound this semester. It's fall 2022. And myself and Melissa Rickenbacher, who is the literacy specialist, did a financial literacy 101 workshop in October 24th. So this is a little delayed, but I wanted to share with you all our workshop slides and a little overview of what we went over as far as financial literacy. So we discussed managing money. What does this mean? Needs versus wants, and do you know the difference? Emergency fund, what it is and how to build it. The 50-30-20 rule, an easier way to help manage money. It's a technique that we'll go over, and the game, The Price is Right, which we won't go through today, but we did this as part of our workshop. It was an interactive game. Someone won a Michael Kors purse. It was great. So managing money, really what this means is knowing your income, knowing what you spend, knowing what you save, and knowing what you can spend on your wants. And the difference between needs and savings is what you can spend on those wants. We talked a little bit about the difference between these two things, needs being something necessary to live and function in your daily life. And we discussed some examples of that. We also discussed wants, something that can improve your quality of life but is not necessary, and what are some examples of those things. And there's a couple of slides that talk about some of the needs versus wants that we have. For instance, we all need to eat, so that's a need, but we don't need to eat out. We can eat at home, we can cook. So we talked about these kinds of things as differences between costs of things that you need versus things that you need, but then you add a want to it, like going out to eat, going out to dinner. We also talked about coffee costs, things like that. So we have a couple slides that relate to different costs for needs versus wants. And this was an interactive portion of our workshop. So we'll breeze through these now. We talked a little bit more about needs and wants and how it can make you feel secure when you think about saving as a need. We did decide that saving is a need because in the future you may need that. And it's really very nice to have a cushion or emergency fund, which is something we discussed at length. We talked about some reasons that people might want to have a savings fund and why that would be important. We also talked about growing wealth, what it means to grow wealth, how you can look wealthy but not be wealthy, and how people that maybe don't look wealthy are wealthy because they're not spending all their money on wants, they're saving it, they're investing it eventually. They're able to spend on things that they want sometimes, but they know how to differentiate between a want that they can do without versus one that they really value, that's something that brings value to their life. We also talked about what growing savings can look like with some numbers. We talked about emergency funds, what it is and how to build it. It's a fund that you put money set aside to pay for large unexpected expenses, and it can help you avoid using a credit card for an emergency. It can help provide a cushion. We talked about how much you should save to start. It's always good to start somewhere. And even though we have $500 here, you can really start at any amount. The more you build, the better, and it grows upon itself if it's in a savings account. So you're able to grow that money. It takes a long time, but every little bit counts toward that goal. And then once you meet your goal, you can increase your goal. You should really never think of your emergency fund as a destination. It's more of a journey that you continue. We talked about why you would need it, and it also really importantly can help you avoid having to use a credit card or take out a high interest loan. So how do we build it? We can automate our savings account. We can open one. We can automate it by putting a portion of our income from a payroll check direct deposited into a savings account, or we can automate money moving from a checking account to a savings account. Pay yourself first, very important, set it and forget it. And we talked about different places you could put a savings account, different banks, different institutions, maybe a credit union. And the more you save, the more you earn in interest. So we talked about the 50-30-20 rule, which is 30% spent on wants, 20% on savings, and 50% on needs. This is as percentages of your income. So when you think about how much you make, you want to think about when you're figuring out your budget or your expenses, how can you budget to make sure that needs are 50%, wants are 30%, and savings is 20. Note here too that wants is 30%. That's really a lot of money that you can use for anything that you want, which is great because you don't want to feel restricted when you're thinking about budgeting, because then you can sabotage yourself by splurging or just feeling so unable to spend money that you feel the urge to spend on something that you normally wouldn't, just because you've been kind of pent up. This is, of course, a guide, and not everybody will be able to stick to this every month. It's a rule of thumb and it's malleable. So you can update it to fit your needs, but it's something to kind of aim for more or less, depending on what your financial goals are. And now we didn't have time to do a budget activity, so we just kind of talked about why we should budget, why you would need a budget. We need money for almost everything: travel, food, housing, clothing, college, and more. So knowing how much money you need helps you know how much you need to earn or borrow for your expenses. It also helps to know your financial picture. It helps reduce financial stress, which can help reduce stress elsewhere. Knowing what you spend on things helps you plan for what you need to cover your costs, and it helps you understand what you like to spend money on so you can budget more for those things. So, one way to start your budget is to create a list of your bills, all of your bills. These can be things that you pay on a weekly, monthly, quarterly, yearly basis. It can feel a little overwhelming to think about all those things, but it's a good place to start. And you just list all of your bills, things that you're paying that are, let's say, a car bill, car insurance, things like that. It can also be other expenses. So make a list of other expenses that aren't regular bills that you're paying, but that you're paying for on a regular basis, like gas or food costs, basic food costs, clothing costs, also basic. Upgrading those would be more a want. So that would be in a little bit of a different category. And irregular expenses that come up, like pet costs or haircuts, oil changes, toilet paper, shampoo, makeup, other things as you think of them. It can be a lot. And then we just start budgeting. So let's see. Next, make a list of your wants. Sorry. So we're still on the want section. Things that you like to buy that aren't necessary. These are things that make up a portion of your budget because you enjoy them, and they're things that you value and that bring your life some joy and happiness. That's important. So that can be food, drinks, going places with people, anything that you can think of that's a want. Then we also are going to estimate our emergency fund, where remember, we want at this point for that to be around 20%. Once you have an emergency fund, you can start saving for other things or even think about investing if you'd like. We have this QR code where you can try the budget at home by scanning it. And this is a great tool if you'd like to start budgeting, but you don't know where to start. It's a good template. You can play around with it. And it'll also show you how or it'll show you what percentages your expenses, your bills, your wants, and your emergency fund are taking as a percentage of your income. Calculates it directly. So things to ask yourself: do you have leftover money in your budget that could go to an emergency fund or to other goals that you have? Think about anything that surprises you in your budget when you do it. Is there anything that you weren't expecting to see? And it can feel overwhelming for sure, but it's not about how much money you make, it's about how much you keep, right? So that's really key. You don't have to make a lot of money to be able to save that 20%. So that's just something to keep in mind as a guideline. But just remember this: you are a priority, and so is your financial security. Your financial stability is a priority, and your future self is a priority. It's hard to imagine ourselves in the future, but our future selves are us. They're the same person we are now in the future. And your future self's going to wish you saved your past self saved. So you're something to think about when you're thinking about your priorities, and your values and goals are priorities as well. And sometimes it's hard to make these financial choices, and there's a lot of trade offs that we have to choose. Maybe we choose not to go to a concert because we really, really want to get to our emergency fund goal. Those are hard choices to make. And sometimes saving money just means being your own advocate. It's looking at all of the things that are pulling you away from your money and saying, no, I want to keep my money. I'm advocating for myself. And that takes time to get to that point, but you will. And you just have to remember what your goals are, what your values are, and just make sure that your money is going to your values. This is something that can take time and it can change over time. So allow yourself some flexibility as you're thinking about your budget, as you're thinking about your savings, and as you're thinking about what things you're going to say yes to with your money and what things you're going to say no to. And listen to experts, not the hype. There's a lot of celebrities and other people that may say that they are financial experts or they have a deal that you just can't refuse. You're going to make so much money or whatever it is. Just know that you might want to listen to an expert. You want to make sure you're listening to someone who is an expert, or you're doing your own research and making sure you're using credible sources to get that information and not listening to hype. And as we approach our game, we're close, but not quite there. So, where should I put an emergency fund? There are a lot of places, but I don't suggest your mattress or under it or anywhere in your house. It's good to have cash on hand, but for a large amount of money that you're saving, it's really good to put that in a savings account. It can be at a bank, it can be at a credit union, it can be any place where there is an insurance. So FDIC insurance insures your money at a bank for up to $250,000. That's pretty big. That's a lot of money. NCUA is the credit union version of the regulatory agency that ensures that your money is safe at a credit union, and that is also insured for up to $250,000. Those are good places to put your savings, and you're going to make some interest on that. Whereas if it's in your home or under a mattress, you're not going to make that interest. Now, sometimes you may not be able to open an account because maybe you're under 18. So you'll need a guardian or a parent, someone who is able to help you open that account to do it if you're under 18. Once you're 18, you can open your own account. So that's really cool. And I also think it's worth noting that if you open a bank account, a savings account at an online account, an online bank, you tend to get a higher interest rate because those banks don't have a presence, a brick and mortar, as they call it, location. So you aren't paying overhead for a building and for all of the people that go to the building. You're just paying for, a buildingless bank, so they can afford to pay a little bit more interest. So that's something to maybe keep in mind. And I think we have, okay, so just know that life happens. Budgeting is not a destination, it's a journey. It's okay to have a bad month, and it's not meant to make you feel bad. It's meant to empower you and to also, uh, just so you know, if you do mess up, you can just try again. It's another week, it's another day, it's another month. Managing money feels good and sets you up for success in your life as a student. Very true. Here's a couple apps that some of us recommend for budgeting. They can be really helpful to help you budget based on whatever it is you're looking for in a budgeting app. But I encourage you to look at these and see if any of them are going to work for you. Then we did a Price is Right Upward Bound edition, which we're not going to do in this presentation, but just know that what it was we had students try to guess different prices for things in our county as of October, and then also some big ticket prices. And we did have a winner who won a Michael Kors purse. So that was really exciting. We ended with a couple words of wisdom from staff and counselors. So here's a list of some of those if you'd like to pause the recording and take a look at these. And at the end of it, we thanked everyone for attending, and that was it. So thank you very much. I appreciate your time today, and I hope you learned a little something about the basics of financial literacy. Thank you.